to see how that works, and perhaps if it works, we will take it up and carry it forward in the coming fora. Now, the topic of this session this morning, the new global outlook to financial inclusion, can be started perhaps from many angles, but I think it would be very important to go back once again, take a step back, and think for a minute, why are we doing it? Why are we doing this? And this question, which sounds like such a simple question, always moves me because I heard it the first time in this very explicit way from a colleague who is unfortunately no longer among us. That is Raúl Hernández-Cos. When we planned from the CMBB Mexico, when we planned for the Global Policy Forum 2011 in Mexico, and we were sitting at Riviera Maya brainstorming on the theme early in the year, and he said, we have to do something about why are we doing this as regulators. And this is important to share. Now, this panel apparently will give us the opportunity to listen to the various stakeholders why we are doing this. But in order to get us underway, we would like to share with you a short video that in fact should encourage us to talk about the people who will ultimately benefit from financial inclusion. So, Prat, if you could show us the video, that would be great, and then we go into the discussion.
I don't want a handout. I have a good product and I'm proud of it, and I know I could sell more.
Og ako kini ikapasigarbo. Kini ang nakausab sa akong kinabuhi.
This has changed my life and changed the community. And it happened because a small bank was willing to work with us. The bank is now a real part of the community, and the community is a real part of the bank. And that makes us all stronger.
Los anhelos de nosotros de pronto tener un lote para armar nuestra casita.
A mí me gustaría ahorrar para el estudio de mis hijas. Eso fue otra parte que también aprendí de mi mami, es que uno debe tener un ahorrito ahí.
Si algún peso rara, sería para dejárselos a ellos para que puedan ir a una universidad, puedan estudiar, ir a un bachillerato.
La sugerencia que yo puedo dar en cuanto al ahorro, pues es que incentivar más a las familias, porque pues aquí la mayoría está acostumbrado como coger la platica y gastarla de una vez, ¿sí?
Nosotros no tenemos de dónde ahorrar, porque no tenemos, como dijera yo, de dónde tener ingresos de plata.
O sea, yo no ahorro en el banco, o sea, aquí dentro de mi casa, mismo un lugar secreto que yo tengo, puede ser allá debajo de la cama, allá en el armario, por allá entre medio de la ropa.
El banco no me van a recibir 1,000 pesos ni 700 pesos.
Most of us are using cell phones and know how to text, so everyone knows how to use mobile banking, not only me.
Si tiene saldo o no tiene, o sea, no necesito ir al centro, ni al mercado, ni a ninguna parte, sino que aquí mismo en mi casa me doy cuenta.
Me parece chévere lo del celular, porque de aquí mismo donde estoy sentada puedo mandar pagar un recibo sin necesidad de ir a ninguna parte.
I use it to pay my loans, to send money to my relatives, and to pay my suppliers. It's a simple text message to the bank, then everything is done.
Yeah, thank you very much for the video to get us onto the theme. Well, we have very distinguished speakers with us, and they have been briefly introduced to us. So I'm particularly delighted to have Professor Dean Carlin with us, who is Professor for Economics at University of Yale. And I know, Dean, you have been following the AFI story and financial inclusion for quite some time from various angles. I'm aware that you have made major contributions, especially to look at this level that we have just talked about, namely the people who matter, who in fact benefit from financial inclusion. And I'm pretty aware of the many resources that you have provided and the research results. Now, we would like perhaps to change our perspective for a moment and ask you, who is someone who is really familiar with the global picture as well, where do you see currently the mega trends in financial inclusion? What would be your answer if you have to tell us in a nutshell in a couple of minutes what are the mega trends?
So 24 hours to think about this.
Yeah.
So I came up with 3 mega trends and 1 not mega trend that should be. The 3 are price, partnership, and evidence. I'll explain each very briefly. I promise I'll stay within the 5 minutes. And the one that's not a trend but should be is focusing on the ultra poor. So by price, this is the most obvious. I don't need to explain mobile money to everybody here, and the huge reason why it provides people access to services they didn't otherwise have, because you're dropping transaction costs really, really low. And this is a wonderful, wonderful thing, but not always. There are some risks. So I'm not going to harbor on the good because it's so obvious to everyone, and I know there's tremendous enthusiasm, as there should be. There are some risks, and there are risks that regulators should be taking into consideration. You make access to financial service really, really easy and costless, and something you can do thoughtlessly through clicks on a cell phone. That's the moment that you can start seeing firms taking advantage of individuals, having them take up services that they don't fully understand. So there's a risk to balance there. In that, clearly there's huge opportunity and it's exciting, but it's something to take into account. The second is because of the nature of mobile money. When you see price going way down, cost going way down, transaction costs going way down, it actually leads to natural monopolies in some contexts. With natural monopolies can be abuse of power, right? This is just economics 101, that is a role for regulators when you see monopolists, is to make sure that prices are at a fair price, or a competition can be facilitated in some way. So price is clearly a mega trend that is going down, which is for the most part a great thing, but does come with some risks that need to be watched. The second is partnerships, which is to recognize that finance is a means to an end. It's not the end. It's not the end goal. The end goal is paying for education. The end goal is investing in your farm. And we are seeing more and more, as transaction costs come down, this is linked to the first, more and more integration of finance in with some other program, maybe it's through the government, maybe it's through some other activity in the community, but it is using finance as a means to further education goals, to further investment goals, things of this nature. And that's important that we don't keep ourselves in these silos, and we understand that finance is a means to the end, and how do we form those right partnerships. The third trend, which maybe I'm more aware of being a professor, I see this more kind of clearly in terms of the interaction I get, but evidence. When I first started working in this space, microcredit had a tremendous amount of hype. Evidence came to bear showing that microcredit does provide some benefits to people, but it does not alleviate poverty in the masses. And as we progress, we have seen more and more evidence come to light, showing us some things that are working better and some things that are not. And that has clearly been an upward trend in the past 10 years, the amount of rigorous evidence we've seen. Financial literacy is another perfect example of that. A lot of hype around financial literacy, very, very little evidence to support that financial literacy alone, without integration into products, actually changes behavior and the types of things we care about for adults. So that's the third. And then the one trend which we're not seeing, which I think we should be and we need to be, is recognizing that a lot of financial inclusion, particularly when left to the for-profit world, which it should be to a large extent, misses out on the ultra poor. That there's still a group of people that are ultra poor, that for all of the excitement we have about what we're talking about, are not, merely getting them access to a mobile money account does not satisfy the issues they're facing. And we need to think more holistically about how we're dealing with social safety nets for the ultra poor.
Thank you, Dean. That was very concise, very short. Thank you very much. Now, I think we just leave it at this stage with your points, but I'm sure we are coming back to this, especially on some of the issues you have mentioned on the evidence. Yesterday when we had a quick preparatory round here, Suhaya Khalik, Managing Director at the GSMA, said, well, I know you have another question for me, but I would also like to say something on this, so please.
Yes, thank you very much. And not to take away from anything that Dean's pointed out, I think the fact that there are risks involved with whatever we do doesn't take away from the fact that the one mega trend that is completely obvious right now is that mobile is playing the leading role in financial inclusion. And the numbers are just astounding when you look at them. You look at something like 246 mobile money services around the world today, in about 90 markets around the globe. 37 of those are in sub-Saharan Africa today. There's over 203 million mobile money accounts registered across the world. And all of that is growing by the day as we speak. Not to underestimate the size of what we're looking at, because you're looking at something like 2.6 billion, 2.8 billion people in the world today who are possibly outside the net of financial inclusion at this point. So I think, to me, the mega trend is about moving in that direction. If financial inclusion is to become a reality over a period of time, then I think we cannot ignore the most fundamental platform that is growing the fastest in the world today, and that is the mobile money providing platform. Once that is established, and by the way, 60% of the services that are being run are run by mobile network operators today. They're investing a huge amount of resource, money and everything else. They're leveraging their branding, their marketing, their distribution to reach the maximum number of people out in the world today. I think the key to this is saying let them build that platform, because health and education, literacy, entrepreneurship will all come on top of that platform, because everybody, as we've seen in the video, as we've heard other people say this morning, everybody has access to a mobile, and it's probably the fastest way to reach those who are financially excluded today. So I would set that up as a point for discussion.
Just briefly, I mean, Dean reminded us of the risk. He said that's great, prices are going down, but it comes with a risk. What's your point on this?
Look, the risk he pointed out was pricing is actually an opportunity. So, the more people see lower prices, the more people will get into that platform. But at the same time, yes, the risks are people get blasé about it. I think that was kind of your point. But I think the way these mobile money providers are growing at the moment is mostly in partnerships with banks, which are regulated by banking regulators. The mobile money providers are also invariably sometimes regulated by the telecom regulator on the other side. So I think the need is not to wring our hands and say there is risk, but to address that risk, put in the right sort of proportional regulation around this whole area to make sure that those risks are mitigated to the maximum, and then allow them to build that platform so that we can see some of these other services coming on top of it. And I think that is the way. It's not only about financial inclusion, it's about digital inclusion, it's about ultimately social inclusion, which is, I think, where all of this leads to in the end.
Mm-hmm. Thank you, Suhail. Now, proportionate regulation would call to really go to this side and talk to the gentlemen who are dealing with that. Now, we have with us John Rangomba, Governor of National Bank of Rwanda, and Governor John. Allow me to use Governor John because I'm always struggling a little bit with the last name, I must admit, but it's easier for me. So Governor John, when I was in Rwanda, as I said before, just a couple of weeks, maybe 6-7 weeks ago, I was pretty impressed by the speed of financial inclusion moving forward. Just to say, the Maya Declaration commitment of the National Bank of Rwanda is one of the most ambitious ones that we have in the network, and I think you're moving very fast on that one. Now, from your point of view, what do you think are the main opportunities and also challenges in the area of financial inclusion for you in the next 10 to 15 years? And you can even reflect along these risks and trends that have been mentioned.
Yeah, thank you. You can hear me? Yeah. Yeah, thank you, Alfred. I think what we've been discussing here, or what we've been doing here for the last 2 days, is one of the main opportunities to financial inclusion. The fact that financial inclusion as a topic has become popular and is embraced by all stakeholders, all decision makers, all policy makers. I think that's a key opportunity that is going to drive financial inclusion going forward. The fact that we can sit here, as you said in your speech, Alfred, earlier, maybe 5, 10 years ago, you wouldn't find central bank governors and private operators sitting in the same room talking about financial inclusion. So this is key, the fact that we have institutions like AFI bring us together to talk about financial inclusion. I think that's a big opportunity we have as at the global level that is going to drive this initiative. But also the fact that at national level, it's now part of the development agenda. It's one of the main factors we look at when we are thinking of the development of our nations. I think that's key. It's on the top of the ladder when countries are thinking of development of our country. The other important factor that is linked to this is the fact that we all embrace it. People come out to finance these efforts to promote financial inclusion, as we've been talking of the Gates and Melinda Foundation. There are different initiatives outside there that are supporting financial inclusion across our countries, and that's key. So I think that's one of the key opportunities or the key advantages that we have today that will drive this agenda going forward. The second key factor is advancement in technology, as my colleagues have already said, what we've seen with the mobile financial services. But this advancement in technology has also made provision of financial services cheaper and affordable to the lowest part of our populations. So today we have what we call branchless banking, banks opening up, or you find banks present in the remotest areas of our country without having to open branches there. The mortar and brick branches model is being replaced by what we call agent banking. Agent banking couldn't be possible if we didn't have these advancements in technology. So that has made it easier for the financial institutions to come closer to the population and make it easier for the population to deal with these financial institutions because of the technology we have today. Of course, with technology, we are talking of mobile financial services, we are talking of internet banking, and the important thing today, which is linked to the first point I made, is that you see some of these global multinationals that wouldn't be thinking of financial inclusion really 5, 10 years ago, today are investing heavily in financial inclusion. Talk of Visa, talk of MasterCard. For example, we have Visa in Rwanda has developed a product called M-Visa that is a mobile financial services that is linking the lowest part of our population to the financial services. And we have the same happening with MasterCard and the other big players in the financial sector. So that's key. Of course, the other factor, the third point I see as an advantage or as an opportunity here is we can't talk, financial inclusion drives development of countries, but development of countries also drives financial inclusion. One of the key challenges that I'll come to in financial inclusion is financial illiteracy. And as we invest in the development of our countries, we're investing in education, and we're having more of our population being educated. Therefore, with an educated population, it makes it easier for them to embrace, to work with financial institutions, which has been one of the challenges, illiteracy, people not understanding the benefits of working with financial institutions. So the development agenda in general is cutting the barriers to access to financial services, and therefore it's acting as a catalyst to have more people coming into the net. So there are many really opportunities, but I would say I look at it around those three main lines, which can be extended in different ways. Now, talking about challenges, I think I identified two main challenges. One I've just mentioned is illiteracy. When we did our Finscope in 2008 in Rwanda, we had only 21% of our population were formally included in the financial services. And part of the challenge that we identified at that time was, one was access, of course, to the vicinity of the financial services, but also the other main hindrance was people not understanding what are the benefits and people fearing to work with financial institutions. As one lady here in this video clip said, she thought keeping money in her house was safer than taking it to the financial institution. So literacy was a key hindrance to this. And as a government and our partners, we embarked on different measures to bring more people to the financial sector, and literacy campaigns, financial literacy campaigns was one of them. And within 4 years, we had this number doubling from 21% in 2008. And in 2012, we had 42% of our population accessing formal financial services. And when you include the informal, this rose from 52, you can hear me? Okay, so this was from 52 to, from 48 to 72. So the biggest challenge here, and this is good that when we sit here, it's one of the key issues we discuss is on financial illiteracy. The other key challenge is infrastructure. As we talk of advancement in technology supporting enhancement of financial inclusion, we know that most of our countries have challenges with infrastructure. That is access to access roads, electricity, these mobile financial services, you find some areas are really remote. They don't have any form of communication. So that's another key challenge that is sort of hindering the progress that we would see in financial inclusion. The other key factor that is maybe linked to the opportunities is the fear of the security, ensuring security of the money. We are mobilizing the population to bank with the financial institutions. We as regulators and the other key stakeholders have a big responsibility to ensure stability of this money. So that's a bit of a challenge, because as we get these quick advancements, how quick are we catching up as regulators to support this innovation and to ensure there's stability and avoid any cybercrime that would ruin everything that we are doing. So that's a bit of a challenge as well, but I think it's something that is, as we sit here, we exchange ideas and agree on how best we can deal with that. So I think I'll really group the challenges in those three areas and the opportunity in the three areas. Thank you.
Thank you, Governor John. Now, just going back to the trends that you laid out for us at the beginning. So there seemed to be some common understanding on the first trend when you talked about prices and the risks that are involved when prices are going down. Governor is mentioning challenges with regards to stability, and the regulator finding it sometimes difficult keeping pace with all these developments. So I think we can perhaps appreciate the common understanding here. The other one was certainly on the partnership. I think there is no doubt around this table that we have a similar view on the necessity that we talk to each other across institutional borderlines. However, I think on the literacy part, I think we need to drill down a bit deeper. But before we do that, first of all, I would like to ask, how is the graphic facilitation going, Calvi? Is that fine? It's going well? Okay, great. I would like to perhaps invite Vladimir Chistyukin now, who is the Deputy Governor of Central Bank of Russia. Central Bank of Russia has been very outspoken on the financial inclusion agenda recently. I had the pleasure to be in St. Petersburg, invited by your annual banking congress. We will hear from Central Bank of Russia a very interesting statement tomorrow in the afternoon. So you are basically and definitely on board. Now my question to you is, against the background of the G20 presidency that Russia was running, where financial inclusion was really a big topic, my question really is, in this context, will, from your point of view, financial inclusion still be a priority, global priority, in 10 to 15 years from now? Why? Or why not? And this is, of course, important for AFI because we are just deciding to make ourselves independent. I mean, does it mean that we are jobless in maybe like 10 years from now? You think you're doing fine, you can explain why. But I would like to hear from Vladimir about his view on this.
Yeah, Alfred, thank you. Yeah, that's okay. Alfred, thank you. You know, I'd like to know, first of all, about the role of the Bank of Russia in financial inclusion. I will be quite frank. A couple of years ago, we were quite apart from the issue of financial inclusion. As a Bank of Russia, we were responsible only for regulation and supervision of commercial banks, nothing more. I mean, in terms of financial inclusion. But since last year, when we had the regulatory reform, we became a mega regulator, and we were authorized new functions, and one of these functions is consumer protection, another one promoting of market development, and therefore, of course, financial inclusion is a part of these goals. Now we're the active player, and we try to promote the financial inclusion. You know, it's very difficult to predict the future. It's very difficult because the world is changing so fast and so quick, and the financial world is changing much more quicker. You can imagine, you can remember approximately 20 or 30 years ago, we used only banknotes and checks as a mean of payment. Afterward, we started to use the credit cards. Now we're talking about e-money, mobile financial services, whatever. What will be next? We don't know, maybe chip in our hand. So it's really difficult to predict. But anyway, I'm quite sure that for G20, that for SSBs, the issue of financial inclusion will be very important, and not only now, but in the near future and in 10 years and 15 years. Why, I can explain you. But let me say a little bit about the challenges, and it will come us to the role of financial inclusion in the policy of G20. So from the regulatory part, you know, regulators are always should be conservative, and why we'd like to talk about threats and challenges, not about opportunities, you know. And from this point of view, I see two main challenges which we will have in the future. The first one is arising from the regulatory part. If we look at the situation with financial inclusion now, we will see that the situation is ambivalent. On the one hand, the standard setting bodies, for instance FSB, after the negative impact of the financial crisis, they started to strengthen regulation, strengthen supervision, in order to reduce or avoid regulatory arbitrage and to promote financial stability, to ensure that each financial intermediary safety and soundness. Is it good? Of course, yes. But at the same time, it can have the negative effect on the financial inclusion, because the burden on the companies, especially small companies, microfinancial organizations, is going higher, and the price of their service is going higher, and therefore they are not able to, they are not thinking about how to reach the consumer, they think about how to survive. On the other hand, and this is a positive side, the standard setting bodies implementing their regulation, they started to realize that it's a great importance to analyze the influence of financial inclusion. Because, you know, it's a strange situation when you have very capitalized financial institution with a high level of liquidity, but really standing alone without consumers. It's a really strange model. So it's the first challenge, and the first challenge is how to find the right balance between strengthening the regulation and to ensure their financial inclusion, to financial access of consumers to financial services. That's very important, and I think now many regulators from Europe, Asia, Africa, etc. are thinking how to find the right way. The second challenge is about financial literacy. The more advanced technology we have, the more sophisticated products we use, the more we understand how we much needed to educate people. Because, for instance, we all have mobile phones, smartphones, whatever, and they have so many functions. I really reckon that nobody in this hall does not know all the functions. We use only the most necessary for us.
Including myself.
Yeah, exactly. And, you know, on the one hand, it's a very good situation. I mean, the person does not need to go to the bank or to other financial intermediary, and to sign the contract, to identify himself or something like this. It just touches the screen and transaction settled. But at the same time, you know, it's a really high level of, it should be high level of understanding about the consequences. So, about the financial literacy. First of all, we need to educate people how to use mobile financial services, e-money financial services, just how to use it, how to operate, how it's acting, what kind of services we can get. And the second one, whether they understand when they touch the screen about the consequences. Because they sell money, they put money on the deposits, I don't know, they put securities on the depository, everything. And this will be the next challenge. I mean, these are two challenges, to find the right balance and to educate the people, financial literacy. Why? For G20, which is responsible not only for regulation, but for whole development of financial market. It will be a high priority in the future. And I think the next point, the last one, G20 started to analyze shadow banking system. You mentioned about it. And they did a lot in this field. But they analyzing this from the regulatory side, how to avoid regulatory arbitrage, how to make competition equal. We can, I mean, AFI can, as a unique platform, contribute in this issue in terms of financial inclusion. How to transform the shadow banking. It's really interesting, sorry, step back. In Russia, we don't like to use the term shadow banking. We use the term parallel banking. Because shadow banking is something, for us, something close to money laundering, some great transfer of money, tax evasion, and so on. Parallel banking. So we can contribute in terms of financial inclusion. How to use the other segments of financial market, not only banking one, to promote financial access of consumers. You know, in my view, it's a really unique opportunity, I mean, AFI, to channelize our efforts in this field. Thank you.
Thank you very much, Vladimir. Now, before I go back to Zuhaya, I mean, both colleagues on my left-hand side from the regulators, I think, emphasized on illiteracy and financial literacy as a requirement for better financial inclusion. When I look at your third trend, when you talk about evidence, I seem to have heard some doubts.
Yeah.
So when you hear this, that there's such a strong notion on financial literacy. And even this morning we heard it in other statements. From your research insight, you might have some question marks. Can you quickly elaborate on what that is?
So, I think it's a classic case of correlation is not causation problem. Sorry. No, okay. I think it's a classic example of correlation is not causation. So we clearly know that higher levels of financial literacy are correlated with better financial behaviors, but we don't actually care about literacy. We care about the behavior. And I know that. I mean, I realize that people who are advocates of promoting financial literacy are believe that as well. But we often fall into this trap of looking at the process change of financial literacy rather than looking at the actual behavior change. When we have seen evaluations of financial literacy programs done with randomized control techniques, it's very rare that we actually see positive changes on actual financial behavior when done with adults. And I think there's two different types of financial behavior. So I heard you talking about one that's like mechanical, and I'm actually not talking about that part. That's a more mechanical thing about how do you actually use the mobile money and things like this. And I see that as kind of part and parcel of the actual mobile money. So that I actually don't disagree with you about that. That there's some, I think that's the type of thing people will learn very quickly from peers and whatnot. I'm not sure that it's something to necessarily push forward. I'm talking about a deeper level about how to decide what savings accounts to use, how to understand terms on a loan. When this has an interest rate, what does that mean? How is this actually going to translate to dollars or pesos or whatever the current, out of my pocket? And people's understanding of interest rates is actually a really important issue, right? And that's not a mechanical thing. Now, ultimately, that's not an easy thing to teach, and ultimately what we care about is whether people are actually changing their behavior with finance. And usually what we see is changes in behavior come about through product changes far more than any sort of educational tool for when working with adults. And this goes right back to the kind of the point about the risks I'm talking about. I mean, the exciting aspect of being able to, with 5 clicks on your phone and get access to a loan, this is great, right? This is like really low transaction costs. This can change a lot of people's access. At the same time, the idea of being able to get a loan with 5 clicks on your phone, my God, this is scary. What if I don't actually understand the prices on that loan and things like that, right? So, and that's a risk that can be managed. I totally agree with you. This is not, I'm not saying this is like, oh my God, don't do this, but just that this is a risk that can be managed, needs to be managed, because with really, really low transaction costs, you make it easy for people to do things they need to do, but you also make it easy for them to do things that they don't actually really want to do and would later regret it. And that's where the literacy can come in, but I think a much better tool is through more likely to be kind of integrated in with the process of actually getting a loan. That they're through disclosures that are kind of very proactive, built into the way the product, and kind of take that example with a loan, having it be really clear what exactly are the costs of that loan, and with abilities to cancel, right? Abilities to make sure that within a week they can change their mind or things of this nature. That's just an idea. But there's very proactive things that regulators can do in that space to help mitigate that get at the behavior that financial literacy is trying to do, but get at it through their actual product design rather than financial literacy.
Thank you. I mean, we will, in the next 2 days, we'll have opportunities to discuss further on the financial education agenda, and I would like to thank you for the word of caution. We will work on this. I would like to go back to Suhaya, who is representing GSMA here with us. And what I have, I mean, really from a bird's perspective and not really practically involved at some point. What I have learned in the past 2 maybe years, 12 months is that the whole ecosystem on digital has changed fundamentally, right? When I remember, I mean, we started off in Kenya. It was all about mobile financial services. Even our working group called themselves Mobile Financial Services. Now I'm coming into the room and see all kind of players from different groups like payment providers, platforms, banks, microfinance institutions, mobile network operators, regulators. So these partnerships seem to have broadened. And apparently there's something going on that in fact has led many of the regulators to think about issues of interoperability in a different way, and so forth. So my question from your point of view, even from the industry point of view, how do you see the engagement moving forward in the next 5 to 10 years? How will that look like? It has already changed, right? Can you please elaborate a bit?
It's come a long way already, and I've been personally involved on the operations side of things, been involved with setting up a mobile money provider and so on. So yes, they've certainly changed and they're evolving, and I think the underlying theme here is that this is a trend which is not going to go away. So it is absolutely imperative that the different players that we are, whether it's the banks, the regulators, the non-banking providers, and the mobile network operators, all find a way to engage to make sure that some of these risks, some of these concerns are addressed, they are mitigated as far as possible. I think people like us, where we work within sort of the fact that with 800 different operators in about 220 countries, have a fairly broad view of how all of this is evolving over a period of time. I think regulation is obviously absolutely necessary, but I think it has to be tempered with proportionality. So the amounts that we're talking about in terms of loans even, or borrowings, are probably under $100 at this stage for an individual. Now it seems like a lot of money to that individual in some rural area in an emerging market, but the amounts actually are fairly small even today. I mean, with all the success and the phenomenal success of M-Pesa, for example, in Kenya, if you look at the context there, the actual money exchanged, the transaction values are still relatively small in percentage terms compared to the entire banking community as a whole. So I think it's important to put that in perspective. We need to make sure that the different players also have a fairly level playing field from which to integrate with each other, so that goes to the point of competition that you made earlier, Dean, where I think it's important that all of them have the same playing field to the same kind of regulation, the same access to the marketplace, and I think those things are very important to address at the same time. So if we are able to engage on that with the private sector, with the regulators, with the other players in the market, and there are many other players who are coming in who are not mobile network operators, who are not banks, as long as the regulation supports all of those different players, I think there's a phenomenal way forward for this to happen. And I think there's already a very fascinating digital financial ecosystem that's been developing over the last 5 years. A lot of it is led by mobile operators. Almost 60% of the activities that we see are led by mobile network operators, so who already have quite a few, I would say, safeguards built into the process. So for example, it's you know, when a subscriber signs on, there's always a KYC process in every country that I'm aware of. So the operator or the provider understands the customer, where he is, where he's operating from, the kind of activity that he's conducting, whether it's calls or texts or financial transactions. All of that is very much available as information. So that's something we can build on in terms of trying to understand the activity, the risk levels that are associated with something like this. The operators also, a lot of the mobile money providers will also have a fairly extensive distribution network at their behest, and their distributors are normally quite trained, they're up to speed on a lot of the issues that are involved with transactional values. So I think there's a lot of investment that's gone into that area as well. So that's another factor which balances some of the risks that we're concerned about.
Can I maybe ask you, do you have, for the audience also to understand more practically, do you have an example of a case where you had an extremely well-working partnership with others around the table, including the regulators? Is there a country case you can...
There are several countries which are actually on what we call the fast grower list, and I would mention the ones that are publicly acknowledged already, places like Tanzania, Rwanda certainly, Madagascar. We're looking at Sri Lanka, we're looking at Pakistan. Some of these countries who have moved quite substantially in that direction of the public-private engagement, the sort of outlining of regulatory frameworks, branchless banking, and so on and so forth. And it's a process of evolution. And I just want to go back to your earlier question whether we'll all have a job in 10 to 15 years. I think absolutely, because the scale of this thing is huge. We're talking a few billion people out there who are waiting to be included. And it's going to be a long and I think productive path with quite a few problems along the way, but nothing that cannot be addressed, nothing that isn't being addressed today. And I'm sure in 10 years' time, we'll probably sit here and discuss a completely different set of concerns and risks at that point. But it's going on, it's ongoing at this point.
Yeah. What I hear from the panelists regarding the long-term perspective is we just don't know. Yeah? I mean, I heard a couple of times, 10 years ago we would not have thought that this would be possible, including myself. No? I mean, even 20 years ago, I remember I was flying from La Paz, Bolivia to Miami over the Amazonas region, and I had a former, this was interesting, a former AT&T manager sitting next to me, and he was in fact looking for opportunities to setting up mobile networks. And at that time there were not so many mobile phones, right? So he was looking out of the window and told me, "Can you see what is possible out there?" And we saw just nothing, yeah? But he saw a market. So maybe that helps us. No?
How's the coverage in the Amazon?
Well, I think it's going up, but fortunately in the Amazon we also have the agents, no? And the correspondent banking. Now let us perhaps just go back to Governor John, and I would actually like to learn from you on how does the National Bank of Rwanda participate in this in this public-private partnership exercise? And maybe you can also tell us which term do you prefer more, public-private engagement or public-private dialogue?
Maybe the term, what's important is what is done during whether it's dialogue or engagement. But I would say dialogue because back home we have that format where government engages with private sector, and it's called public-private dialogue. So how do we work with the other partners in promoting financial inclusion? One is as a regulator, we work with or we coordinate the players in the market, the banks, the telecom companies, the payment service providers, and you talked about interoperability. So we are bringing all this together and pushing them towards achieving this interoperability that will cut the cost of payments and all that. So we are engaged as really a coordinator of these services to bring together all the players and agree on how we push forward this agenda of interoperability. But number two is as a regulator, we engage with the private sector, with the banks and the other stakeholders. When you're putting in place regulations that will govern or ensure stability within the market, we need to get ideas from the stakeholders to avoid coming up with a regulation that will stifle innovation. So these actors influence the regulations we are bringing on board. But of course, security is number one, stability is number one, is key. But engaging the players ensures that we don't over-regulate, and therefore we ensure stability, but we allow innovation and development in the financial sector in general. The other area that we've really worked together with the other partners, is on education, as I said, on financial literacy. We came up with a program at the central bank, working with the Minister of Finance, and we had Care International joining us, we had Visa International joining us, and the other players in the market working together with us to really carry out this financial literacy campaign for people to understand the benefits of working with financial institutions, the benefits of keeping your money in the bank, the benefits of saving, but also the obligations of people. When people start working with banks, they already think of taking credit. It's good, it's going to support you, but you need to understand your obligations, because we also had problems with a society that earlier were used to getting handouts. Now they're moving from handouts to getting loans from banks. How do they differentiate between handouts from the donors and the likes to loans that they're obliged to pay back? So financial literacy is really very wide and complex. If people are to embrace and use financial services to their benefit, not just opening up an account, there's a lot that has to be done in terms of educating the population. So we engage with partners in different areas, on the regulatory side, on the products that are coming on the market, and more so on how we can work together to cut the bureaucracies and the unnecessary barriers that increase costs and ease access to finance that will bring more people on board.
Allow me to ask one more question on this, and perhaps a quick answer. Coming back to Dean, he was mentioning under the first trend also the issue of monopolies. Apparently, you're talking about competition. So what are you doing for good competition in this market?
Yeah, one I think is we are improving on our legislation and consumer protection is one of the areas we are focusing on. So monopolies are always a challenge because they'll take advantage of the monopoly tendencies to trip off the consumer. So we are revising our regulations, and consumer protection is key factor in this. Mm-hmm. But also what we are doing today is, for example, with the banks, we are publishing information on the fee structure of the banks, the interest rates, the fees charged by the banks, and we direct banks to be open to the consumers, no hidden costs or fees here and there. So this publication of information to the public will increase competition, because now people will compete on the products they're putting on the market and on the terms they are giving to their customers. So at least a customer in bank or this other financial institution will know what is happening in other institutions. We haven't started doing this by naming banks as such, but at least we are putting there general information on the highest interest rate in the market during this week, the average for the market, the lowest financial institution, and so but we also, banks are really, and the other financial institutions that we regulate are supposed to disclose all their charges to their customers, so they know, they take up their products knowing exactly what they're benefiting. And we're educating people that if you are dealing with this financial institution, always see what you can get from the other financial institution. And we've seen competition really growing in our country.
Wonderful. Now, before we open up
can I just make a point to that, please, just for a moment? So I think that's absolutely perfect that we share as much information about this with the customer. Now, but I wouldn't underestimate the savviness of the average customer in an emerging market today. I mean, I've seen some of it. So they are already, they may not be literate in the traditional sense of the word, but a lot of them will, when you talk to them, will say, I use this mobile phone or this SIM card in the daytime because it's the cheaper one, and I use this one in the evenings because there's a special offer which I can use to call certain people in the evening, and this is the one I use for my international calls or whatever it is. So they are quite adept at figuring out the advantages or the competitive offers that are already in the market, at least on the mobile side. So now if that is the premise, then I would not underestimate their ability to therefore catch on very quickly to information available on the mobile money side or the mobile financial services side and be able to make the right decisions. But that's just coming from where I've seen it happen on the ground.
Oh, okay. Great. So in other words, customer behavior is a driver of competition too.
It certainly does, yes. Yeah.
Great. Now,
can I just add one little thing?
Sure.
Which I think the big issue in monopoly is not so much on the finance side, it's on the mobile side. It's the mobile operators, because there's actually a natural monopoly in many situations to have one mobile operator. And we do see a lot of monopolists or near monopolists on the telecom side. Whereas banking, it's not exact, you don't have natural monopolies. It is more natural to see competition. So the concern that I was raising before was more to the extent that mobile money is building off of the telecom industry, then that's where we need to be concerned.
It would be unfair to cut you off, please.
So I could give you a couple of numbers just to correlate that point. In the 90-odd markets that we just referred to earlier, 57 markets have 2 or more live mobile money services today, and 33 of them have 3 or more services. So I would argue that the competition is already beginning to take place on the ground as is today. And so that's the one thing I wouldn't worry about too much, to be honest. Yeah, there may be a couple of countries where there's a very big whopping one operator, but that's an exception than the rule at this point.
Okay, I think we take it for a moment, as you say, and go back to Vladimir. You know, Russia, as a member of AFI, Central Bank of Russia, as a member of AFI, I think is we are very pleased to have you, because apparently Russia as an emerging economy comes with features that you know a number of countries also show. Developing countries, emerging countries, even developed countries. I think you're in a very good position, perhaps, to help us to understand, is financial inclusion a developing country issue, or is it also a developed country issue? And if so, if the latter is true, how would it look like in a couple of years from now?
Thank you, Alfred. In my view, both. The short answer is both. I mean, developed country is interested in promoting financial inclusion, and the emerging markets has the same problem. I mean, this is the same issue. Maybe we need to talk about the different angles. For instance, when we talk about emerging markets, emerging countries, they think about how to overcome lack of traditional financial services, how to ensure traditional financial services. At the same time, when they see that it's not the proper way and the easier way to use, for instance, mobile new technology or something like this, they started to develop this segment. In developed country, generally, they do not have the problem with traditional services, for instance, traditional banking service. And maybe, I don't know, 95% of population can use the bank service. But at the same time, when we talk about innovations in financial market, it's very important that not only 3% of citizens of the developed country can use these innovations, and all the others still rest in some old-fashioned, I don't know, traditional service. Therefore, for them, it's important to promote equal opportunities for any innovations they have in their industry. That's why, in my view, it's a very great importance, not only emerging markets, but also for developed markets.
Okay, thank you very much. I think it's now time to invite the audience to ask questions to our very knowledgeable guests here on the panel. So please feel free to give us questions. Yeah, Samir from Pakistan, please.
Thank you. Samar from the Central Bank of Pakistan, you see. Since we have got two, you see, central bankers and a professor here. So my question is that how important is it for the networks like AFI, you see, to convince the central banks that financial inclusion, you see, apart from financial stability, is extremely closely related to the monetary policy, its implementation and transmission as well. I'm saying that because this monetary policy subject is very close to the heart of the central banks.
Mm-hmm. Thank you very much. Can I have one more hand or one more question, please? Over there. Two over there. Only one.
Yeah, I am Ajay Mishra from Reserve Bank of India. My question is to the professor and the person from MNO. If my question is, if education does not change behaviors, then what does?
Education does not change behavior, what does? We come back to this later. And person from MNO, please, can also answer. But before we go into this, I have one more, and then we just ask for the responses. Anyone else? Okay, then let's maybe ask or start with the first question what about this transmission mechanism between stability and monetary policy?
For sure, I can start. Okay, first of all, if I understand right, I disagree that the financial inclusion is not the part of financial stability. In my view, exactly, it's a part of financial stability. Exactly. And the right thing is to persuade people from the regulator that promoting financial inclusion, you ensure financial stability. At the same time, I can imagine the situation then the transmission channels also can be channels of microfinancial organizations. But you know, for instance, in Russia, it's hardly possible. It's an unlikely situation. It's because the main providers of liquidity for the market is commercial banks. Their stake is about, I don't remember, 90% is in assets of the whole financial markets. And I cannot imagine the situation, for instance, that the Bank of Russia will start to provide resources for microfinancial organizations and use them as a transmission channel. Therefore, my answer is, theoretically it's possible, but in practice it's very difficult to achieve. Thank you.
Yeah, I think it has something to do with monetary policy transmission mechanism, because for example, in most of our countries, we are dealing with the challenges of currency in circulation that it's really outside our control. We don't have any control. Money in people's pockets, in mattresses, as the lady was saying, it's very difficult to regulate or to manage if you are to manage your monetary policy. But when we talk of financial inclusion, maybe we need to take it beyond just bringing people to work with banks or whatever. We look at the capital markets as well. We look at people working with capital markets too, as part of the financial inclusion agenda, because it supports increasing their wealth and all that. And so as you have more people working with financial institutions and more people working with the capital markets, this will support the development of the capital markets, and this automatically will support the transmission mechanism that's of the monetary policy. So it is really win-win and that's why central banks should be interested in promoting financial inclusion. It makes our work on the monetary policy a bit easier. Thank you.
Thank you. Now, as a professor, education seems to be important for you, right? So can you perhaps...
So, I think there's a good analogy to it too, like weight loss. If you're trying to get someone to lose weight, you don't actually need to teach them all about nutrition. You just need to teach them what to eat or exercise more, things like that. It's similar. You don't need to actually have them fully understand all the biomechanics underneath it. Just change the behavior. So to answer your question, I think product design when it is the short answer to where we have seen huge behavior change. And by product design, I don't mean just literally like the terms and conditions of the product. I mean the entire process through which one engages with a product. So let me give you very, very concrete examples. I'll give you about 3 examples within what we refer to as an umbrella of commitment savings. An account in the Philippines that we tested, actually with John Owens over there on the right, introduced me to this bank about 10 years ago now. In Mindanao in the Philippines that we did a study with, where it had a very simple rule. You cannot withdraw your money until you reach a goal. That led to a 300% increase in savings for the people who opened the account compared to a control group, led women to have more power in the household compared to a control group, and more household durables purchased for those women. We've seen this done in Malawi and Kenya with agriculture, giving people access to an account that allowed them to squirrel their money aside and save it at harvest season so that it was there for planting, then invested more in fertilizer, higher yield in their farm, higher household expenditures. We did a study like this in Uganda with schools, helping people save up for school expenses. Again, compared to a control group, we actually see a downstream impact on test scores for the children, an increase of 8%, because now that they had saved up money to pay for workbooks and pens and paper for school, that they then actually were able to learn some basic things in school, whereas without a pen and paper, you can't really learn too much. So these were all done through the product design itself, and tested out as ways of changing behavior. The one outside that I would say that is near and dear, I think, to a lot of the people out here is through the mobile money. Through mobile itself. We did what we thought of as the simplest thing we could possibly do. We wanted to see what would happen if we just sent people text messages reminding them to save. No theory behind it, no literacy there, just, hey, don't forget to make that savings deposit. And that text message alone, a series of them once a month, increased savings by 6%. Not a huge increase in savings, but compared to the cost of a text message in a country with reasonable non-monopoly priced text messaging, that's actually a cost-effective tool for mobilizing savings for a for-profit bank. So those are just some examples. And we also see this in developed countries. So Save More Tomorrow is a good example of a program which has reached millions of people in America, helping people save more for retirement. So these types of ideas are not, specific to developing countries, and that is done in the U.S. on a set of people who would pass with flying colors any test of financial literacy, yet are radically under-saving for retirement. And a simple change to the product and the process for saving for retirement led to radical changes in how much money people had put aside for retirement.
Thanks for sharing these research results. Now, on the education issue, from your side, quickly.
Well, I'm not an expert on education, but I think everything that Dean said is absolutely spot on. I think education is through product design, through awareness, through learning from peers in the marketplace, and you'd be surprised how effective that can be. And just being aware that all of this is out there, and part of what a lot of the mobile money providers are doing today is the extent of the marketing and the positioning of the products in the marketplace, because remember, they are competing, so they are trying to make people aware of what's out there and to give them the pros and cons, and this is done through the medium of radio and television, whichever one is available. Text messages, absolutely. So there is a lot of different sort of ways that this can be done. It doesn't have to be strictly relegated to traditional education, as it were.
Thank you. I think we take one more quick one, if there is any, from the lady over there, please. Is it Kate? No, I'm not sure. It's Kate. All right, it's Kate.
Hello, I'm Kate McKee from CGAP. So I heard kind of an undercurrent of concern on the issue of digitally delivered credit. And I wonder if we could just put a question to the panel specifically on that this is clearly a different product in terms of risks, consumer behavior, et cetera. And what are your views on whether we might need to be a bit proactive in thinking about how credit products are being delivered through digital means? Thank you.
Okay. Perhaps we have two answers on this, maybe from your side, Suhaya, and maybe from Governor John, and then we sum up, please.
Yeah, so I think if I understand the question correctly, there is a concern, but I think regulation is absolutely necessary. But remember that the quantum, the size of what we are talking about here is very, very small. So in a lot of the cases, I think what should happen is that we should have a very balanced, proportional regulation sort of approach to all of this. Recognize that these are the trends, these are the kind of quantums that we are talking about. They are not the same quantums as you would do in traditional brick and mortar banking. They're very different levels, and we should take that approach. I think we work together, the private sector, the public sector, because there's a lot of innovation taking place in the private sector. If they work closely with the regulators and with the public sector, they understand exactly how to do that product design to ensure that the risks are, as far as possible, minimized or mitigated.
Okay, thank you. Governor.
I don't know if I got the question right. What was the question exactly?
No, the question was on digital delivery and the risks behind digital delivery of credit. How do you deal with that and the risks?
Yes, I don't know if I got the question, but the risk of credit, there's always risk associated with that. But the question is, as they always say, if you don't try to take a risk, then you never advance in your life. So there are risks there, and I think what we do as regulators, as I said earlier, is the financial institutions dealing with customers have to be transparent in all the transactions, and the customers takes on a product exactly knowing the obligations vis-a-vis what they're engaging in, and what we maybe back home, what the government has done to support small and medium enterprises or startups is to put up advisory services. We have what we call business development services that support people that wouldn't really be able to structure a project to present to the bank, and this supports the small or the uneducated to come up with a project that is designed as a bankable project, and also advises these on how to manage their project. So it's, yes, there is risk, but there are mitigating factors to limit on the risk, because the risk is not only to the consumer, but also a risk to the financial institution. So we look at both angles, and the initiatives to try and support the consumer to mitigate the risk within their projects. And then there are also initiatives to support in terms of the security. There are maybe small and medium enterprises or individuals that have good projects, but because they don't have security, maybe they wouldn't get financing from the banks. So the initiatives government has put in place to support part of the security that will allow good projects to get financing from the banks. I don't know if I really answered your question well, because maybe I didn't get it 100%. Thank you.
Thank you very much. Maybe we sum up, just each of you get 20 seconds to give me a statement. And, put yourself again into the shoes of myself when I was flying over the Amazonas. Yeah? And unfortunately, really, the only thing I could see was green forest, while the guy next to me saw business. And I was actually flying from Bolivia, where we really worked on microfinance. So you can see the connection. Now, if you can have a wish, what would you like to see in 10 to 15 years, Vladimir?
Okay. Just in one phrase, yeah, I'm okay. I'd like to see no differences between institutions providing the same, in essence, products. So no difference in institutions providing the same products.
Thank you very much. Dean, what's your wish? What do you want to see in 10?
Gosh, I'm not sure. I think I'd like to see us, hopefully you will change your name at some point to away from financial inclusion, because we'll be included, to something closer to protection, let's say. Right? Because, you know, the point being everyone's now included, but, you know, or you call it Alliance for Good Financial Inclusion, maybe. Right? The point being that we're going to see, you know, with transaction costs coming down, we're going to see everyone included. But then, you know, look at America, look at Europe. I mean, we still have issues there on financial behavior and financial products. So, you know.
Listening to you, I have another one, which could be Alliance for Financial Inclusion based on evidence, isn't it?
That would be great, too. All thumbs up for that one.
I see it slightly differently. I think it's more than a wish. I think it's going to be reality, that if you proceed down the course of financial inclusion, I would in 10 years' time or 15 years' time want to see 4 to 5 billion people in the social inclusion, and maybe that's when we change our name to, social inclusion, because I think the platforms that are being built today will inevitably lead to social inclusion over a period of time. I think that's my wish, that's my dream.
Thanks for your thought-provoking inputs for our future name, but let's maybe hear from John.
Yeah. Maybe it's more or less similar to what my colleagues have said. I think what we are doing here, discussion around financial inclusion, is not having people accessing financial services for the sake of it. So my expectation, and I think it's possible, that in the next 10 years, people will be using financial services to improve on their livelihoods. And back in the developing countries, the main agenda is poverty reduction. So I hope, and I think it will happen, that financial services will play a big role in reducing poverty in our countries. And therefore, maybe in the next 10 years, we'll have big chunks of our population enjoying decent lives like any other part of the world.
Thank you very much. My job today is a bit easier than usual because we have a graphic facilitator, so we can actually follow the discussion and the summary. I would just like to thank you, Dean, for laying out the 3 trends that you saw. The price, I think we are mostly in line, I would say. Perhaps we have one issues around monopoly structures and how to deal with that, but apparently partnerships is something we all can share. And then on the evidence side, I think the whole issue on empowerment, financial literacy, education is part of this forum. So I think we are going to drill down a little bit deeper on that. And we have heard encouraging statements at the end, the 22nd statement on where we want to be in 10 to 15 years from now, which I think can also guide us the way in terms of social inclusion, even better evidence, serving the ultimate poor. I think that is what we are looking forward to do. With these final remarks, I would like to thank the panelists. Thanks for opening up this forum with your stimulating inputs, and I'm looking forward to the next discussions. But let's give a hand to our friends who have been with us. Thank you. Thank you. Great.